And we move on with the program, and you would say that if you wanted to create the ultimate stable coin, the first naive answer would be you do it by a central bank. Then the second point would be that depends on which central bank will be issuing the stable coin, will have a stable value or not. And perhaps the paradigm of a stable currency is the Swiss franc. And we are in Switzerland, so it is for me a pleasure to welcome the next speaker in the session today. He is Bastien, who is the head of banking operations at the Swiss National Bank. And at the same time, he's also adjunct professor of monetary economics and financial market infrastructure at the University of Basel. He has been at the Swiss National Bank for the last 15 years, where he was also previously the head of money markets. With respect to his education, he obtained an habilitation from the University of Basel and the PhD as well from that university, and he holds a master in economics from St. Gallen, if I understand right. Sebastian, it's a pleasure to welcome you to the BGIN conference. The stage is yours.
Great, thank you very much. So I hope you can hear me. I would also like to congratulate you, Caroline, on your speech, and also it has been comforting to me to hear, what you plan, and also that, we think that innovation should not come at costs when it comes to complying with regulation, be it now anti-money laundering or consumer protection, etc. So I think this is a very important step, and also how you elaborated on it. I think this is it was comforting. So what I'm going to elaborate on is more on the central bank digital currency. So the ex-representative of the Bank of Japan has been mentioning it. We are thinking about in CBDC in both ways. So on the one hand, on retail CBDC, which is for the general public, and a wholesale CBDC, which is only accessible to regulated financial institutions. And when we talk about it in the internal discussions, we always take this slide because we want to show the different forms of central bank money. So on the one hand, you have cash, which is issued by the central bank, so the SNB. So you see that on the horizontal line. This is, of course, accessible to the wider public, but also wholesale. As Caroline had also mentioned, wholesale is financial institutions. So it's not corporates, it's regulated financial institutions. When it comes to deposit money, so account with the central bank, this is only possible for regulated financial institutions, but not for the public sector. And when it comes to digital currencies, tokenized currencies, then of course you have this differentiation. So, and there, several central banks work on a retail CBDC and other work on a wholesale CBDC. And then when you come to money issued by private institutions, you of course have bank deposits. So that can be accessible by the wider public, but also by banks. So banks holding accounts at other banks. And then you have tokenized assets, for instance, Swiss franc stable coins or other stable coins, which are backed by fiat currency. So those would be an off-chain stable coin, whereas Luna was a on-chain, or is, sorry, is an on-chain coin. I wouldn't call it stable coin, but it's an on-chain coin. And I think this differentiation is also important. And then you have the cryptocurrencies, which are issued by the private institutions. When we talk about money, it's also important for us to sense that money, or that there's behind a transaction, there's always an economic value. So I buy something and I pay with cash. So it's important that it remains a means of payment, but the party who sells something receives the payment and hence has it as a store of value. So for that party, it's important to have an asset which is stable in value because it's a store of value, and the unit of account, that's the third element, which is important when it comes to currencies. And I think the stable coins are virtually a response that central banks are not doing anything in the CBDC space, because if central bank issued a CBDC for the wider public, I would say then that will be preferred by the public compared to stable coin. But of course, because central banks have not been issuing a CBDC, this is the response. And I think here it's important just to see that stable coins backed by fiat currency already provide a large level of security because it's backed by fiat. I think it's important to see that it's issued not by the central bank, it's issued by a private institution. So there is a counterparty issuer risk, which can be addressed by holding the fiat currency at all times to back the stable currency. But nevertheless, it's important to the trust is important here. And I think you mentioned that it's provided by an external revision company on a yearly basis or monthly basis. I think in the end, it should be on a daily basis because you need the assurance that the money has not been, used otherwise. But in the end, I think stable coins are really a response that central banks have not been doing anything in this perimeter yet. I think I'm going to skip this one because I think we all know that cryptocurrencies do not qualify as a means of payment or a transaction because they have a high volatility, and this is why we have the stable coins. When it comes to the digital innovation that we look at, we always take this two-tier financial system, and Caroline had also been mentioning it. So what you see here in the blue circle is the Swiss National Bank, which provides accounts to financial institutions. And this, in our view, is a systemically important part. So those are like transactions between financial institutions. Those have to settle in central bank money, and the system has to function at all times. Thanks to this account, you can also provide payment services to the end customers, and that's in the green layer, where you see that the retail transactions go via the banks, via the system of the central bank. So retail transactions are not settled in central bank money, they're settled in commercial bank money because the retail clients do not hold an account with the central bank, but nevertheless, it's then settled via the system provided by the central bank. And when it comes to these two layers, when we come to the blue one, that will be the wholesale CBDC. When you come to the green one, and the central bank decided to issue a retail CBDC, then that will go all the way from blue to green. So those are like the two differences in CBDC definitions. When we look at the trends or the caveats that we now have in payments, then there are like three elements where we think it's important to work on. One is the speed. So at the moment, I have a bank account with a Swiss bank. I can do payments until 10:15 in the morning. Afterwards, if I want to do a same-day transaction, I have to pay 15 Swiss francs. So what did I do? I did a top up with my credit card on Revolut, and then I use Revolut to do payments. And that cannot be the case. I mean, it's okay. But virtually, banks have to improve their internal systems to provide faster and instantaneous payments, because this is exactly where the future is. And if banks are not moving, then other parties will, come in and fill in this gap. The second aspect is cross-border payments. As you had also mentioned, it's inefficient, it's timely and very cost intense. And I think central banks have to work in this area as well to provide new functionalities or to provide interoperability between payment systems to, alleviate these drawbacks, or to address these drawbacks in cross-border payments. And I think one important aspect is also interoperability. So on my conclusion slide, you will see that I don't believe that we're going to have a big bang and suddenly we're on a DLT world. So there's always going to be an interoperability between the existing world, which we have now with fiat currency, and the potential new world, which is based on DLT. So I think this interoperability is a very important aspect. And also when we talk about internally, which technology should we use? I always say maybe we're not going to be locked in, and this is not going to be the biggest decision that we're going to take the next 100 years. I think for the central bank, but also for stablecoin issuers, it's important to define a concept. What do you want to achieve with your stablecoin or CBDC? What information do you want? For instance, we did in our experiments, we had a observer node where we observed all the transactions. We had a notary node which did the validation of the transactions. I think for central banks or issuers of stablecoins, it's important to define your requirements, which technology has to comply with. And afterwards, you can issue your CBDC or your stablecoin on various DLT platforms. Because as we're not going to have a worldwide ledger, we're going to have national ledgers. You're going to have to issue your coin on different ledgers. You have to ensure interoperability. And in a sense, the important aspect is to have the concept and to, that there is no arbitrage between the different Swiss franc CBDCs, but that they're all the same. So that's one answer also to that question which had been raised before. So we see those three trends which are coming or have already knocked on the door, and which we central banks also play an active role in. When we publish a report on retail CBDC, and we're continuing our work on retail CBDC, but it's more on a conceptual basis. We want to take part in the dialogue, but we don't believe in it in a very strong sense, because we don't see the added value. I'm not going to go through all the elements, but one element is if you improve your existing payment system. So if you have instant payments and you can pay the year round, any time at the day, and it reaches the receiver, then we're persuaded that there's no added value of having a retail CBDC, because we would provide the same functionalities as a commercial bank. So in that sense, we see that there's no added value. I think one risk, which we also see with a retail CBDC, is that depositors can then decide between holding money at a commercial bank or at the central bank. And depending on the interest rate, they will switch, or depending on the risk environment, they will switch to the central bank, which will lead to deposit losses at commercial banks. But the commercial banks provide loans, so they need money to work and to provide loans. And if you have no money at no deposits, then if the deposit base vanishes, then that will lead to a credit crunch for the economy. So that will hamper the economic development. And what we also see, if we issued a Swiss franc retail CBDC, this could also increase the value of the Swiss franc compared to other currencies. And up to recently, we have been combating a too strong Swiss franc. So in that sense, we see a lot of arguments which speak against a retail CBDC. But what we have been doing is we have been working on a so-called wholesale CBDC. So what you see here is on the left-hand side, you see the existing financial market infrastructure, where you have a trading layer where you buy stocks, and then you have the central clearing, which is 6x clear, and then you have the security settlement with SECOM, and then the cash settlement, Swiss interbank clearing. This is the payment system which is run on behalf of the Swiss National Bank. So that's the central bank money central payment system. And when it comes to the discussion, where could DLT provide added value, it's often mentioned that it could provide value, that you have one DLT system where you have the cash and the security side on it, and you can have immediate settlement, irrevocable settlement, and programmable settlement. So meaning you have the delivery versus payment, and this is ensured. So that's one of the expected benefits. The second one is the conditional settlement, so on the on smart contracts. And the third one is, I always mention it as the golden copy. So the idea would be that you wouldn't have to do any bookkeeping anymore, because you know that the DLT platform provides the true and the full information on your assets and on your holdings. That could also be one of the added values. I try to stay positive in this area, but nevertheless, because I'm very familiar with the existing financial market infrastructure, I do see that some of the arguments or the benefits which DLT promise are not that big. So for instance, the current Swiss value chain, which we did some analysis on it. If I do a trade on a money market transaction on a trading platform, which has a settlement of T+0, immediate settlement, then the fastest settlement time where you have cash against security, so delivery versus payment after conclusion of the transaction is 12 seconds. So I do the transaction on the platform in 12 seconds, I have my money on the account. So is it, and it's delivery versus payment. So there's no settlement and counterparty risk. So in that sense, you could say we already have a very efficient financial market infrastructure in Switzerland. So it's not really that you have a pressure to move into a new direction. So that's one element. And the second element on the golden copy. So we have a lot of assets on our balance sheet as well. And in my team, I have one person who does half a day, does the reconciliation process. Reconciliation meaning comparing the internal bookkeeping with the external bookkeeping. That's half a day, he does nothing else than that. But that's 0.5 FTE. So, I cannot economize a lot of FTEs by going on a DLT platform. So, but I will need a lot of IT experts if we move to the DLT platform. So I do see that there could be some added value, but at the same time, I think especially Switzerland does have already a very efficient financial market infrastructure, and hence, that the case is less than maybe in other countries. But nevertheless, it has gone live with a digital exchange, which is based on Corda R3. And what we did was, in an experiment, we addressed the question, how would we issue wholesale CBDC, or how would we provide central bank money to a DLT platform? How would that look like? And we didn't address, is the whole world going on DLT or not? We just addressed the question, if the world goes to DLT, and if the central bank decides we want to provide central bank money, how will we do it? And then we did two proof of concepts. One was that we issued a token, so a wholesale CBDC. And the other one was we had a link to the current payment system. So that was the interoperability to the RTGS, real-time gross settlement system. So what we did was, in the two proof of concepts, on the one hand, on the right hand, you see the RTGS. So that's the payment system, which I showed before, the blue circle or the half circle, which is a systemically important part. What happened was that Bank One transferred money to the Swiss National Bank, and in the counter value of the money that we received from the Bank One, we had the SMB node, which then issued on Corda R3 on the SDX platform, the digital exchange. We issued a wholesale CBDC, which we then transferred to the Bank One node. And then afterwards, CBDC was provided on the DLT platform, and you were able to do a delivery versus payment between Bank One and Bank Two. And you had the notary node, which validated that the holdings of the securities and cash were correct, and that there was a delivery versus payment. The other proof of concept that we did was that we said, well, actually, you could do the transfer of the security side on the DLT platform and the transfer of the cash side in the existing system. So you would combine these two worlds and see, in what way that would also provide the answer to how to integrate central bank money onto the platform. So those were like the two proof of concepts that we did, and those were the key findings. So what we found is that both proof of concepts are feasible, but at the same time, and that's also what we now heard from other central banks, but also from commercial banks who did the RTGS link and experimented in that way, is that the technology, the DLT technology, cannot blossom in the same way as if you have the RTGS link. So in the sense that programmable money, to ensure that there's really the smart contract is triggered and that you address the full, DVP, is better addressed if you have everything on DLT. So that's something which we have realized. A link to the payment system is also feasible, but in the sense does not allow the DLT technology to prosper in the same way as it would if everything was on one platform. What we then did was, of course, there are a lot of policy questions if you go if you do the proof of concept 1, because for us it's important that only eligible parties can hold CBDC. So you need to do this whitelisting or ring fencing in that sense. Ring fencing is always negative, but I mean, just to ensure that only the eligible counterparties can hold central bank money. And that's something which you can also ensure on a technological scale. But nevertheless, then the question arises, would you have an overnight CBDC or only an intraday CBDC, and what would the remuneration be, etc.? So that's something which raises a lot of policy questions, but I think very interesting policy questions, because I said a CBDC is actually a token compared to a security, and you could now have a CBDC where you have a coupon on it just as a security. And the coupon would be on a daily basis. So, you could do the remuneration in that sense. You could also have a CBDC where you have, instead of the discrete remuneration, so meaning only end of day remuneration, you could have a continuous remuneration. And if you hold a CBDC for 1 hour, you'll get 1/24 of the interest rate, and the other person will get, the next part of it. So I think there are also a lot of interesting questions which you could then also address with the technology. But what we realized was that there's certainly further work that needs to be done. We then did a phase 2 of that project where we had a connectivity to our bookkeeping system. So in that sense, we really had this end-to-end wholesale CBDC settlement, and we realized that it functioned, but nevertheless, of course, there are still some interoperability issues which need to be addressed to have the full straight-through processing. And what we also did with the Banque de France, which I found a very exciting project as well, was that Corda had the technology to have a dual notary node. So we did an experiment with the Banque de France. They issued a Euro CBDC, we issued a Swiss franc CBDC, and the Euro transfer was then validated by the notary under European law, and the Swiss franc was validated under Swiss law. So you had 2 different notaries and 2 different regulatory perimeters, which then you had the delivery versus payment. So I think in the end, that could also provide a value of having one DLT platform but different notary nodes, which would then account for different regulatory environments. So that was something which I found very exciting as well. So to conclude, I think there are high dynamics in payments. So there are like big techs and fintechs which are now have become active in the payment sphere, and I think banks need to move now in order to remain competitive. And we see that instant payment is one of the important functionalities. I think instant payment will also be the response or the requirement for the DLT world. So meaning if you have a USDC and you want to redeem it in US dollars, then, if you came and said, oh yeah, but the Federal Reserve is closed now, come by tomorrow again and I'll give you the cash, that's not going to be the good response. So I think if you want to move from one world to the other, and because DLT is going to be 24/7, you also need to have an existing world, which is 24/7. So to move from one area to the other. Cryptocurrencies is, in our view, a no-go, just because they have a high volatility. And I think stable coins are the response if central banks do not issue a CBDC. But of course, they need to comply with all the, it cannot come at a cost when it comes to consumer protection, AML. So what we do as a central bank, we provide the adequate framework. So in the payment system, we ensure that we have instant payment to have innovation in the payment system. And what I also mentioned with a DLT is that I think DLT would have to cover the whole, the financial market infrastructure. I see that there's different pressure in different countries depending on the efficiency of the existing payment infrastructures or infrastructures. We are working on it. I don't think that we're going to have a big bang, as I mentioned, and we're going to be on DLT. So interoperability between DLT platforms, but also interoperability between the existing world and the DLT world will be an important aspect. And in the sense, I think when it comes to the technological solution, be it now Corda, be it now Polygon, or then Polkadot with interoperability, I think in the end, you just need to have a concept, and then you could say, okay, we're going to issue a CBDC on Corda, we're going to issue a CBDC on Polygon, as long as they comply with the requirements that we have, be it observer node, notary node, etc. I think we can be very technological agnostic in that sense. Okay.
There are questions here, from the audience. I start with Luis, who was.
Thank you. Thank you very much for the presentation and for the work. I have some questions touching some different points. I'll just try to succinctly go through them, and then you just give your answer because I think there's many questions from the rest of the audience. So shortly, you mentioned the cross-border aspects, but not like any solution for or discussion regarding the cross-border CBDC or something coming from the IMF, like a digital SDR or something like this.
Yes.
Or, I'm sorry, or a digital solution coming from this. So cross-border discussions, I would like to get your insights a little bit more on that. Possible. Then in terms of, you mentioned that the demands for Swiss francs. So Swiss franc is very strong. The SNB needs to kind of balance it. I wanted to get your insight a little bit of are these stable coins a possible solution to lower the demand on the SNB? How would you foster, or how the SNB could foster the stable coins, Swiss francs or other stable coins? And one last one. On all the presentation, I didn't saw anything mentioning the policy potential for the CBDCs. So in terms of the governance tools that they can bring with the programmability, there's, for instance, I think even in this university, some recommendations to have like a taxation on the transactions that would only become potentially tools like this. It's never mentioned, so I would like to get your insight on that. Thank you very much. Maybe the other questions.
I think on the first question on cross-border payments, as I understand it at the moment, and I think it's still, central banks are, the BIS Innovation Hub in Basel, which has the Innovation Hub. So, for instance, Project Nexus is the project where you have interoperability between instant payment systems between different countries. But how I see it now, and I'm open, to getting feedback on that, is that you have interoperability between instant payment systems, but it's not a settlement, it's a clearing system. So in the sense as you are now a US citizen and I'm a Swiss citizen, and I transfer you money, you have it on your cell phone, and you see, oh, you got the money from me, but virtually between the banks, the money has not been transferred yet. So on the retail level, you have like only the information that you got the money. And on the settlement level, that will be between the banks. So your bank and my bank or financial institution, that will be then on the wholesale. So as I see it is on the retail layer, you would have like the interoperability between systems, but those are information, and the flow of the money will be in the blue area. And that's why we did the experiment with the Banque de France, because you would transfer Swiss francs against euros, and the transfers between the banks. So for instance, if I transfer money to the US, you have about 10 correspondent banks in between. If you had everybody in this blue layer, and you had different regulatory parameters, you could reduce the number of intermediaries by a lot because everybody is on the same platform. So in that sense, you would have the clearing layer and then a settlement layer on DLT. Yeah. On the programmable money, yeah, we haven't been working a lot on it because I think it has advantages, but also disadvantages in the sense that, you know, as a central bank, we don't want to program, you know, and steer the public and say like between 12 and 1, you can use a train, and between 1 and 2, you can go to McDonald's, but afterwards you cannot spend your money anymore. I think that's like, you know, you would steer the economy in a very strong sense. So that's why we haven't been working a lot on it. I do see that the advantage which you would have would be, you know, if you have taxation on it, be it now also on the wholesale CBDC area, that, you know, the withholding tax would be deducted immediately. And the middle question I forgot. I'm like, Carol, what did all this fall there? Pardon? Oh, strength of the Swiss franc. So I think the stable coin, because it's like very similar to commercial bank money, because it's not central bank money, would not generate too much additional Swiss franc demand, because it wouldn't be central bank money. I think it's really because if you could use central bank money or hold central bank money, that would create an additional demand, whereas a stable coin, I think, would be very similar to commercial bank money, because you have fiat, which is, you know, which is then used to cover the stable coin.
Mm-hmm.
Yeah. Okay, I have to hurry.
I have a question concerning privacy. Your colleague Thomas Moser has presented some concept regarding that. Other central banks were not so keen in asking for privacy, and it's also a question concerning stable coins. Of course, how do you deal with privacy? Every transaction needs a trace, and of course you could provide technical means for privacy, as Thomas Moser has pointed out, limited to a certain amount so that anti-money laundering can be complied with. The question is, when you enter retail space, when you enter small transactions, this becomes really important. If you have large transactions where AML obligates oversight anyway, then it doesn't really matter as much. But with small transactions, it does matter. And how do you provide for privacy in this case? And maybe, Caroline, you can answer that as well. Thank you.
Thanks, Jörn.
Yeah, so that's more in the retail sphere. So we're thinking about looking into that aspect with the zero knowledge proof, so that you would have, you know, that you would have a validation of the transaction even without knowing the identity of the person. I think in the sense is that we don't see ourselves in the driver's seat when it comes to this area, because that's the two-tier financial system where banks are in charge, you know, of ensuring it. And I also see that it's a very similar aspect to banknotes, where we don't control either who does the transaction in a store. I don't know if you want to help me out here.
Even though you're retail, you still have the ability to have that level of insight in the retail space. If people are using CBDC, I would assume.
In the wholesale sphere, we wouldn't, the retail could not use the wholesale CBDC, so it could only be used between financial institutions.
You know, we have invested in technology to protect privacy when using stable coins. You know, the AML checks that are needed still exist, but there are also ways to provide pseudo-anonymity that still meets those AML compliance standards. And I think that's where the future will go here, is how do you protect privacy for the consumer while still giving that broader financial crimes compliance aspect.
I mean, do you have privacy in the existing world? I think banks also know your identity, and I think it would. you have privacy, but if you give me the cash, then I know your identity. So.
So Mika has an exemption under €1,000, right? Is the travelable exemption. I mean, I think still ultimately the cash to cash transfer is still analogous to a personal wallet to another personal wallet.
Mhm.
If you're sending a peer-to-peer transaction, there's no exchange in the middle of that, providing that. Yeah.
It was Jumper.
I did want to do the same question on the privacy issue. So I just wanted to know about the current interaction between the central bankers about the privacy concerns. So of course some difficulty in the position of the privacy data by central banks. So when it comes to the discussion of the Bank of Japan, so the privacy concern is one main agenda for further contemplation of the issuing CBDC. So how do you interact the such kind of discussion in the collaboration with the BIS Innovation Hub and other central banks?
Yeah. So that's one aspect that the central bank community is trying to address. Of course, if you have the two-tier financial system, then you would still have the banking system, which is in charge to ensure that there are no illicit transactions and that privacy is ensured, but also the KYC process is undertaken. And I think in the end, the BIS Innovation Hub has not been working yet on the privacy aspect, but that's certainly something where I think one could experiment. The question is just, is that really the role of the central bank, or should the financial institutions be active in that area?
Mm-hmm. Fantastic. The last very short question, because we're running.
Yes, well, I hope it's short. So I think the very last sentence you said was, I paraphrase at least, that when it comes to DLTs and the CBDC space, it will all be probably technologically agnostic, right? Now, there has been lately a lot of challenges and call for projects, especially when it comes to retail CBDC. Entities like MAS, for instance, the Monetary Authority of Singapore, are very interested in issuing projects in that space. But when I look at the winners of these challenges, typically they are first big firms like IBM or Consensus. And second of all, I get very much the strong feeling that it's geared towards private chains. Yeah, I really get the feeling that pretty much no government or central bank in the world would want to implement a CBDC system on a public technology. But you casually mentioned Polygon, for instance. So maybe you have some, I don't know, comments to disprove what I'm saying?
I would say that it's a change process, and central banks need to change as well. And I think they just need to take baby steps to get into this direction. And the permissioned ledger with, for instance, Corda was a first step in getting familiar with the technology. But in that sense, what I also see is that it's a private sector solution. So in that sense, you could also say, why not take a public solution where you have a foundation which develops and continues the development of the technology. In that sense, I try to go now into that step and bring in the thought within the central bank community that maybe we should be more open-minded and not, and issue a CBDC on a public ledger, but still ensure a whitelisting and ensure that only those who we want to hold CBDC can hold CBDC. But if technology can address that issue, then I think it will be important to go in this direction, because I just see that most of the use cases will then also be based on EVM compatible solutions. So
Mhm.
patience.
Okay, thanks.
Fantastic. Thank you very much, Sebastian, for the presentation.